So let's look at the question 2. So someone should read for us. Okay, someone should read for us. Nobody is there.
Please, we are there.
Okay, someone should read for us first.
Okay, question 2. Extracts from the financial statements of A is subsidiary B and is
The associate is the C.
associates a year to 30th supplement of comprehensive income. Additional information.
Okay,
Please, can you
let's
scroll
start
up
with
a
the
bit?
additional information. Okay.
A. The functional currency of both A and C is the AS, and the functional currency of B is BS. B. A acquired 80% of B on October 1st, 2013 for 5,300,000 when the reserves of B were 1,800,000. The investment is held at cost in the individual financial statements of A. C. A acquired 40% of C on 1st October 2011 for 900,000 when the reserve of C were 700,000. The investment is held at cost in the individual financial statements of A.
Okay.
D.
B.
No impairment investment. E. The group policy is to value the non-controlled at fair value at the date of interest of B at 1st October 2013 was 600,000. F. Relevant exchange rates are as follows. Beginning 0.5, 2015, 0.71, at end 0.63, average 0.65. Required. Prepare the consolidated statements of comprehensive income for the A group for the year ended 30th September 2016 and the consolidated statements of financial position as at that date.
Okay. So what we have to do is that we have to determine who is the parent
A.
and who is the subsidiary.
B.
The subsidiary is B. And who is the associate?
Yes.
C.
Okay.
C.
So if we are doing consolidation, we don't consolidate the financial statement of the associate. The associate is not part of the group. So the only consolidation we do is the parent and also the what? The subsidiary. When did the parent acquire the subsidiary?
1st October 2013.
What is the reporting period for? What is their reporting period?
30th September.
So that is a full year acquisition, isn't it? So since it's a full year acquisition, we are going to consolidate everything like that. But it's a half year or 9 months, then we look at the revenue of the subsidiary, which is the B. So if they acquire them for 9 months, it will be 9/12 times their revenue. But this is a full year. So we start consolidating from the beginning of the year to this one. Let's take the first one. Let's take the A group statement of Statement, consolidated statement, not statement, just statement. Consolidated statement of profit or loss and other comprehensive income. So let's take the figures now. Let's take the currency. We are going to do this in the parent what? Presentation currency, which is the A dollar. 00 will be at the top. Are we there?
Yeah.
So the first item will be revenue. So we pick the parent revenue, 4,600 plus the subsidiary's own, isn't it? All right. The subsidiary revenue is what?
2,200.
Do you have any,
2,200.
do we have any intra-group transaction in the question? No. So we can go direct and translate that. Profit and loss items are translated using average weight. So average weight. So they are saying that let's determine how we are going to do it. 1 AX is equal to 0.6500. And we don't know. So we don't know. Will be equal to 2,200. Are we going to divide or subtract? Are we going to divide or multiply? If you want to know, if you want to change the subsidiary figures to the parent own, are we going to multiply or we divide?
We divide.
We divide. You see, the easiest way of you identifying whether to divide or subtract is for you to go and see the parent investment in the subsidiary. What is the parent investment in the subsidiary? 5,200. 5,200. Okay, it is 5,200. Okay, the parent is measuring this at its own figure, and this one too, they are giving the parent figure. Sometimes they can give you the parent figure over here, then they will give you the one in the subsidiary's currency. Then you see whether they have divided to get what the parent is reporting over here or they multiply. That's another way of doing it. Or if you can't do it, just do if 1 cedi is equal to this or $1 is equal to this, how many dollars will be this? So this will give us 2 divided by the average figure. The average is how much?
0.65.
Okay. 0.65. So the next item will be what? Cost of sales. The associate is not part of the group. The parent can only consolidate the subsidiary, the person that the parent has control over. All right. So what is the cost of sales in the question? Cost of sales and operating profit. Operating expenses, the parent own is 3,700.
3,700.
The subsidiary is what? 1,600
1,600.
divided by 0.65.
65.
Okay. We don't translate the gross profit. So the profit for the year, after we have done everything, the profit for the year itself will come. Okay. So let's come to income tax now. So what will be the income tax? The parent is what? 200.
200.
150 divided by 0.65. Am I correct? Okay. After this, I'll get the profit for the year. If this question will come, they will give you like this. They will just give it to you like this, the full year. They will give you the full financial statement, the two, profit or loss and other, and statement of financial position. They will give you the two. So that is how the question will come on a foreign subsidiary. All right. Let's come to, let's come to other comprehensive income. I want to show how we share the profit, but let's move on. Other comprehensive income. Revaluation. revaluation of property, plant, and equipment. Okay, the parent figure is how much?
200.
The parent figure is 200.
200.
Okay, plus the subsidiary is what? 120
120.
divided by 0.65. Okay, let's come here. I have forgotten something. We need to show the share of associate profits. The parent is going to have the share of the associate profit that they made for the year.
Okay.
So let me show the share of the associate. Share of the associate profits. That will give us, when did we acquire the associates? They were acquired October 2011. That was so many years ago, isn't it?
Yes.
So what is the profit made by the associates? Their profit is 400. Profit for the year.
For the year. 400.
So we find 40% of that. So share of associate profit will be, there is no post adjustment to the associate profit. So if there is anything that will reduce the profit, we subtract it before sharing the profit, but there is nothing like that. The foreign subsidiary question does not carry plenty workings, because the purpose is what they are testing is how to translate the currency. That is the motive for the foreign subsidiary. So that will give us 0.4 multiplied by 400. Okay. Let's come here. Do you have any other thing? Then we have the, okay. Associate, are they have any revaluation gain? Is the associate have any revaluation gain?
Yes.
Yes, they have 70.
70. So the parent will take 40% of that share too. So the parent will take it and bring it to 0.4 multiplied by 70. The parent will send it to their other comprehensive income, not profit or loss account, because the revaluation is extraordinary item. So let's come to statement of financial position. Statement of financial position. So the first item is we have assets. We have assets, then we have non-current assets. The first non-current asset is what? Property, plant, and what? Equipment. So we are taking the parent own 7,000 plus the subsidiaries own, that will give us 4,000. Profit and loss items are translated at average rates, but balance sheets are translated at closing rates. So let's go and look for the closing rates. The closing rate will be 30th September, isn't it? The closing rate is the 30th September, which is a reporting period. That will give us 0.63. So we divide this by 0.63. I hope we are here. All right. You see, you can just do this and leave it and go if you can't do anything again. They are going to mark all of these things one by one. So the investment in B will not come. Investment in C will also not come. The investment will cancel their equity shares, and the investment in C will be shown as investment in associates. So we now come and show investment in associates as workings. Investment in associates. Investment in associates. So that will be shown as workings. Then we calculate goodwill. if there is any, let's leave a space for goodwill. Now let's now count to the current assets. The current asset will be that of the parent, which is 3,000, plus the subsidiary's own, which is 2,000, divided by 0.63. Then we have our total assets. We now count to equity and liabilities. Equity and liabilities. Equity liabilities, we have share capital. The share capital we pick only the parent own, because then the parent's investment will cancel the subsidiaries equity items. So we bring only the parent equity items. So that will give us the parent item will be, so you can just bring this one straightforward. The parent item, which is 2,000. The subsidiaries own, we are not going to bring it because the parent investment will cancel that. So the parent reserves, we do working for the reserves and bring it. Okay. Then let's come to current liabilities. Okay, we are going to show NCI, non-controlling interest, which will be 20%, non-controlling interest will be 20%. So we do workings for that. We come and show our current liabilities. The current liabilities, the parent one is how much? 2,000, plus the subsidiaries one is how much? 1,500 divided by 0.63. Okay. Let's total everything from this place. So let's convert all these things. 200 divided by 0.65. How much are we getting? How much are we getting?
3384.
Let's approximate to the nearest.
3385.
3385.
Okay. 3385. Let's add it to the 4,600.
$7,985.
7,985. Okay. Let's not count to the cost of sales. 1,006 divided by 0.65. What are we getting?
2462.
2462.
62.
Let's add it to the parent figure. 3,700.
6160.
616.
Okay, so this is the cost of sales. We subtract. Oh, let me show my gross profit. I'm not showing my gross profit. Okay. So let's find the gross profit now.
$1,823. 1823.
Okay, 1823. Okay.
Yes, please.
What will be the share of associate profits? 0.4 multiplied by 400.
160.
It will give us 160.
160.
Okay. The profits for the year, how many do I have?
That one is before tax.
So the income tax will give us what? The income tax is what?
431.
431. This is also an expense. 431. So let's now see what we can have. Let's see what we are having. So what will be our profit for the year now?
1392.
Is what?
One three nine two. 1392. Without the associate profit, should I add it?
Yeah, add the associate profit. It's an income to the
Okay.
income to the parents.
1552.
1552. This is the profit for the year, isn't it? All right. Let's now count to other comprehensive income. So other comprehensive income, we translate the 120 divided by 0.65. What are we getting?
$185.
185.
Yeah.
So plus 200, then we find 40% on the associate revaluation surplus. What will be the total that we are getting?
413.
413. Okay. So what will be the total profit for the year? Total comprehensive income.
$1965.
No, you see, we are going to show a gain on translation. So let's leave this like this. We are going to show gain on translation. Let's leave this like this. Let's come to the statement of financial position. Let's put them. So 4,000 divided by 0.63. What are we getting?
13349.
4,000.
13349.
Okay. Hey, the 4,000 divided by 0.63.
It's 6349.
Yeah, I'm getting 6349 plus 7,000.
13349.
13349.
49. Yeah.
Okay. The investment in associate, we do calculation for it. The good to do calculation for it. Let's count to the current assets. It will be 2,000 divided by 0.63.
3175
Plus 3,000.
plus 3000.
What are we getting?
6175.
6175. Okay, the reserve we do calculation for it. Let's look at the current liabilities.
Current liabilities.
1,005 divided by 0.63.
2381.
2381.
Okay. Plus 2,000.
4381.
381.
You haven't done it. You haven't done any working, so this is what you have done. If you can't do the rest, you can leave it. So let's look at the workings now. The workings, the things that you have to show is the group structure. The first thing should be the group structure. The group structure will also take ticks. So the first thing that you have to show is a group structure. So the group structure, the parent is having what?
80%.
80%.
The parent is having 80% of the subsidiary. And the NCI is what?
20.
Okay. NCI is 20%. But the parent is also having 40% of what?
Investment.
40% of C, isn't it?
Yeah.
So we have C. Then the parent will have 40% of that. But this one, if in the exam, you can show it properly. So the exam, what we do is that we draw a line. We draw a line like this. Then we put the parent here, we put the NCA here, then we put the company at the top. Or you can just draw a line over here and put them parent 40%, this one. The next one is you look at the acquisition date for the subsidiary. What is the acquisition date for the subsidiary?
1st October.
1st October, isn't it?
Yes.
So October 2015. Okay. What is the reporting date?
It's 13.
It's
Since it
2013.
was 13 or something.
September.
It's 2013.
So September 30, 2016. What is the post-acquisition period? Post-acquisition period is what?
1st October.
The post-acquisition period is that from the time that they acquire the subsidiary to the date of,
2013.
yeah, that will be 1 year. So from October to September, October last
What
year
is
to
it?
September
2
this
years.
year, that is 1 year. That is the post-acquisition period. The time that they bought it,
Planners.
the time that they acquire the subsidiary to the time that they are reporting or to the reporting date, that is the post-acquisition period. All right. The next thing that we have to do is the
Hello.
net assets.
Planners.
Yeah.
The acquisition date. 1st
Yes.
October 2013.
It's October 2013.
Yes, sir.
Oh, so how many years is that?
So 2 years.
That will be roughly 3 years.
3 years, eh?
Okay.
Yeah, 3 years. 3 years.
So that will give us 3 years. Yeah, I thought it's 2015. So the net asset, what we do is that we show at acquisition. We show at acquisition and also at reporting. So this net asset is just helping us to know the value of the subsidiary at the time that we are buying them and the profit that they have made within the year. We have seen the profit that they have made already, which is 450. There's nothing that is going to affect this profit again. So it is 450. So what will happen is that let's look at post-acquisition profit, which is the difference between the two. So the net asset that we are talking about is we are finding value for the equity shares. So we normally start with the share capital. So their share equity capital. Share capital is how much? Their share capital is how much?
At reporting is 1 to
1,000.
1,000. We assume that there were no issue of shares during the year.
1,000.
At reporting is the same as at acquisition. So if you subtract the two, you are going to get 0, isn't it?
Yeah.
All right. What is their reserves at acquisition? Their reserves at acquisition is how much?
Acquisition.
The reserves, that is the B. The reserves will be given in the footnote.
It's 1,800
So that will be 1,800.
divided by.
But what is the reserve that they have in the statement of profit or loss? In the statement of financial position, what is their reserves?
3,500.
So what was the post-acquisition profit made?
$1,700.
1,300.
1,700.
No, it's 1,700.
Okay. Do they have any other equity instruments?
Are we not going to do the translation for that one?
Are we not going to do what? Okay, translation, we don't do the translation for this one. We calculate the goodwill, everything in the subsidiaries presentation currency or currency before we translate it.
Oh, okay.
So we do the calculation of goodwill. Sometimes if you are preparing only statement of profit or loss, you can do the NCA also calculations in the subsidiary one, then you translate the figure that you are going to get.
Okay.
The closing rate. You can also do it like that. And also,
Okay.
I will show you the two so that you do the one that you like. All right.
Okay.
So there is no fair value movement in this particular question that they don't count much with the normal consolidation principles or workings that we do. They don't count that much. So there is nothing over here. Then we find the total. What is the total for them? 2,800, 4,500. Are we okay there?
Yeah.
So the profit for the year will be this one. This is the profit that we share among them. Okay, let's now look at goodwill calculation. So let's now look at the goodwill calculation. Okay. Goodwill calculation is what? We start with the purchase consideration, the amount that we are paying, and how much we are paying for. Then the difference will be the goodwill. Okay. So how much are we paying for them?
5,200.
5,200. Okay. So what is their net asset now?
2,800.
You see, this 2,800 is for the total value of the company, which is 100%, isn't it?
Yeah.
Yes,
But the
please.
NCI is taking how much? How much is the NCI?
20%.
80%.
The NCI is measured at fair value.
The fair value.
Look at the last, the E, the footnote at E.
600.
600. So
600.
if NCI is taking 600, then how much are we paying for?
Reynolds,
Yeah.
1,008.
the currencies are different, so don't you need to convert it before we do it?
My what?
I mean, the currencies,
Yes.
they are different.
Yes. We are doing foreign subsidiary. Who are you doing? Are you doing cooking?
Now, what I'm saying is that, yes, what I'm saying is that the consideration
Yes.
is in a currency, and the
The
NCI
5,200 is
fair
for
value.
the. So we have to change it back to.
Exactly.
The
Sorry.
currency. Mhm.
Sorry. To the subsidiary currency. Yeah, I was thinking, let's change that. Let's translate this. So that will give us 5,200 divided by. We are going to use the currency, the translation rate at the date of what? Acquisition. That will be 1st October 20 what? 30. That will be 0.5. Am I correct?
Are we going to divide them what?
I can go to the top.
I think we have to multiply.
We have to multiply because it's in A's
Well,
currency.
It's in A to
It
B.
is a okay. Oh, shall I go on the floor? Ah.
Stress.
So you have to multiply because me, I was thinking is assembly. It's not that I'm tired though. If someone is saying that I'm tired, I'm not tired.
We are not the only ones confused, tired and confused.
So what will be the figure now? 5,200 times 0.5. So we are paying 2,000 what?
600.
600. Okay. But how much should we pay? How much should you have paid for? the amount that we should have paid for is the 2,800 minus the what? The NCS what? Portion.
Fair value.
So the amount that we should have paid for should have been 2,200. But we are paying 2,600. It means that there is something over there which is not visible, but we are paying for it, which is technically called goodwill. Okay. Okay. So this is the goodwill. The goodwill is 400. There no impairment to either investment has occurred today, so there is no impairment of goodwill. So if there's an impairment of goodwill, they will say 10%. We calculate 10% on this one and go and add it to administrative expenses or cost of sales. But there's no impairment, then we just send a goodwill 400. We translate it at the closing rate at the reporting date, which is 400 divided by what?
0.63.
0.63. That will give us how much?
635.
635.
5.
635. Okay.
635.
All right. Let's now count to
Please let me see your goodwill calculation again.
my what?
The goodwill computation.
Okay.
Okay.
Are you okay?
Thank you.
All right. Let's go to NCI.
Yes, I'm okay.
Okay. Let's go to non-controlling interest calculation. Okay. The NCI, we look at their fair value. How are we going to do it? Are we going to do it in the foreign currency and translate it at a closing rate, or we will do it and add? Okay, let's do that too. Let's do the first one. Let's do it in the subsidiaries currency, which is 600. So what will increase the NCI? It is a share of what? Post-acquisition profit.
Acquisition profit.
Okay. The share of profit. Okay. That will give us how much? It will be 20% of that amount.
340.
0.7 multiplied by 1,700. How much are we getting?
0.2.
I think it's 20%.
0.2.
It's 20%.
0.2.
Okay, 20% times that. How much are we getting?
340.
Finally, so you are hungry again.
340.
Have you given me food? You say I'm hungry again. As if you are giving me food. Hey, what are you trying to say? Okay. You see, let's look at this. Let's look at this. You can see that the subsidiary is showing only reserves, isn't it?
Yes.
It means that their revaluation and everything, profit for the year revaluation, are all included in the what? In the reserves. So sometimes they will show, they will give you retained earnings. If they give you retained earnings, that is relating to only the profits. So the revaluation gain over here, which is 120, the NCL will also take 20%. But since they are showing only reserves, it means that the revaluation surplus, the retained earnings, everything are included in the what? In the reserves. So the revaluation gain over here is already included in the reserves. So we just share that, then we move on. There is no what? Impairment of what? Goodwill. So there is no other thing that is going to increase the NCA again. So what we do is that we find the NCA total, which is 940, then we translate it at a closing rate. So if we are doing statement of profit or loss, this is how we do it. I'm going to show you another one again. So let's translate this. Closing rate will be 0.63. Am I correct?
Yes, please.
So how much are we getting?
1492. 92.
1492.
2.
Talk for me to hear. I don't want to do something that you
1492.
I'm hungry. Okay. So you can go to the statement of financial position now and show NCI 1492. Okay. Let's now do workings for the group retained earnings. The group retained earnings. So the group retained earnings, we start with the parent balance. So what is the balance on the parent account? What is the balance on the parent account? The reserves. The reserves on the
12,100.
parent account is what?
12,100.
1,100.
12,100.
Okay, 12,100. All right. So what are the things that will increase the parents? This one. The first thing will be share of what? Post-acquisition profits. Am I correct? So the share of the profit will give us how much? 0.8 multiplied by what?
1,700.
1,700. Then we translate this answer at a closing rate. We'll do all, then I'll show you another way of doing it again. So the closing rate is 0.63. What are we getting?
Two one five nine.
2159.
2159.
9.
What will increase the parents? This one again. Share of associate what?
Profit.
Profits. Share of associate profits. Okay. Let's now look at the share of the associate profits. The share of the associate profit proper. Okay. What was the associate reserve at the time that they bought them? What was the associate reserves the time that the parent bought them?
700.
700. What is their reserve now?
1,000.
1,500.
So what will be the difference? What will be the profit made from the time that the parent bought them?
800.
It will give us what?
800.
800. So 0.4 multiplied by what? 800. How much are we getting?
There 20.
3.
20.
Okay. Okay. What are we going to do next? You see, if you are doing statement of profit or loss, this is a shortcut that I'm showing you. You do all the workings for.
Please, why is the 800?
The 800 is the difference. You can see that the results for the associate is 1,500. But the time that we acquired them 40%, 2011, that was so many years ago. But the profit that we are showing over there is just a profit for the year. So since we are preparing the statement of profit or loss for this year, we show the share of their profit for this year. But what was the entire share of the profit at the time that we acquired them? It is a difference between the reserve that they have at the time that we acquired them and the reserve that they now have. So they now have 1,500, but the time that we acquired them, they have a reserve of what? 700. it means that they have made a profit of 800 from the time that we acquired them up to now. It is that profit that we are going to have the share of the 40%. Are you okay? Can you move on? Can you move on? Halali?
Yeah.
All right.
Yeah.
So you see, this is shortcut that I'm showing you, but I will show you the other one too. But the other one is just too complicated. But we do that one too, then we just close. Okay. You see, if you are doing statement of financial position, what you do is that just do the workings for the non-controlling interest, then the total in the subsidiary's currency, then the total that you are going to get, you translate it at the closing rate. The profit that you are going to share for the retained earnings to the parent to translate it at a closing rate. But what will happen is that at the end of the day, what are we going to do? We need to what? We need to what? Take off the parent investment, because the investment will cancel. The investment will cancel the equity shares of the subsidiary. So we just have to cancel this. This will be cancelled at the reporting date. So we have to use closing rate to cancel the equivalent of this. So we have 5,200 now. 5,200 now. So if you're having 5,200 now, what is the equivalence of 5,200 at the day that we acquired them? It was 2,000 what? 600, isn't it?
Yes.
At acquisition day was 2,600. But right now,
Yes.
how much will be the 5,200? How much will be the 5,200 now? At the reporting date, it will be
3,276.
Okay, that will be 0. This one multiplied by
5,000.
5,200. We are having 3,276, isn't it? All right. Another way of doing this is that the investment that we have in the subsidiary is, you can see that we are making a gain, isn't it?
Yeah.
Our this thing has increased. What is the gain there?
Yeah, yes.
676.
676.
Okay. Another way of doing this is that the investment that we have in the sub was 5,200. Was 5,200. But this is in the subsidiary's currency, so you have to translate it using the closing rate. But the easiest way of doing this is that, okay, what do we have? This is, we have investment of 2,600 in the subsidiary, which is equal to 5,200. But now, what will be the value of the 2,600 as at today's date? So we now use the closing rate to translate the 2,600. So how much are we going to have? 2,600 divided by 0.63.
Oh, 127.
4127. So this one is not actually a gain. 4126. What happens?
7.
Okay. What happens to our investment?
We are losing 1073.
Okay. So this is how it's supposed to be calculated. 5,200 minus what? 4127. We are having 1073. So what will happen is that, what was the investment that you are holding? What is the value? 2,600. So this is the 2,600 that we are now having. So this will be translated at a closing rate. So translate this at a closing rate and see. Are we going to divide or we multiply?
We divide.
We divide.
Are you sure?
Yeah, because the
Foreign
2,600 is the B currency.
Okay. I'm coming. 4127 times 0.63. Okay, we divide. Hi. Don't say I'm confused. Oh. So let's look at how we do this. So that particular gain will go, that particular loss will go to their retained earnings, which is loss on investment. Loss on investment, which is what? That will be subtraction. That will give us 1073. Okay. So this is the end of this one. We can just total and put it there. Then we go to workings for investment in associates. So this is now this. So our retained earnings now will be 153.1. Okay, reserve will be 135.06. I hope I'm correct. Okay. Let's now go to investment in associates. Investment in associates. Investment in associates is just seen as you putting money in the bank. Okay. So if you are putting money in the bank, what is the amount that you put in the bank on October 2011? What is the amount that you put there? What is the amount that you put there? How much did you acquire the associates?
900.
So during the year, what will happen? If there's any interest on the account, it will increase your account balance, isn't it?
Yes.
Yeah.
So we have the share of the associate profit, post-acquisition profit, which we already calculated to have 320. So the investment in associates will now be, if there's any dividend is paid out of profit, so we supply the dividend. If there's any impairment in the associate, it means that our value will now reduce. It means that in the bank is now suffering a loss. The loss will affect all of us. Or if this thing is affecting only my investment, then it means I'm the only one that is going to bear the investment. And then that particular loss that they are suffering on my investment will reduce the balance that I have. So if there's any impairment in the associate, it will reduce the parent investment. If the associate pay any dividend is paid out of profit, so it will also reduce the investment. It means that I have an amount of money that I'm saying that give me part of the money. It means the amount that I have, it will reduce. That is the dividend. But if there's nothing like that, we are going to have 112 this one. This is the investment in associates. Let's go and put this one to it. Let's go and put this together. 1220. So let's now put all of these things together and see before we come to so let's have the total assets now, which will be this plus this. Okay. Let's find all of this. This plus this plus this plus this. Okay. This is a shortcut too, but let's go back to the long way. Then we see what we can do. So this one, we come and show the translation gain here, but let's do the workings. Let's do the workings if we don't want to. So the investment in the associate will still be the same, but if we are doing the other way around, then the share of the associate profit will be translated at an average rate. So let's do that. Let's translate this at an average rate, because profit or loss items are translated at an average rate. So if you want to do the complex one, we translate this at an average rate. All right. So let's translate that at an average rate and see. 0.08 times 1,700 divided by 0.65. I'm getting 2092.
2092.
Okay.
Yes, please.
So this loss over here will not come. This loss over here will not come. So what we do is that the NCL will also, their first amount will be translated at opening rate. So this will be, the 600 will be translated at the opening rate. So 600 divided by the rate at the date of acquisition, which is 0.5.
Hello, Linus.
Yeah.
Hello.
Yeah, I can hear you.
The first format was okay. It's like if you add this one, you will complicate things for us.
Let me just manage this one like that.
Okay. You see, this one is for, okay, this one is also okay. You can use this one. You can just do everything. You do the profit, you translate it at a closing rate. But I want to give you the recommendation that the IC people will be looking for. But since you're okay with this one, me, I don't have any problem. But what we'll do is that if you are going to do the other one, you translate everything. NCR at a closing rate, at the opening rate, which is at the date of the acquisition, which is this one. You translate that. Okay. Then the profit will also be translated using average rate. Profit for the subsidiary will be translated at average rate before they will share it. So parent will take each share at average rate. The NCL will also be translated at fair value at the date of acquisition. So what we come and do now is how to calculate our retranslation gain. The retranslation gain will be calculated as this. We look at the net assets, retranslation gain, gain on net assets. So let's do that. This one is very important for our profit or loss accounts. Okay. The first one is that we start with our net asset at opening. What is the net asset at opening? It was 2,000 what? 800, isn't it? What was their profit for the year?
Yeah.
What was their profit? 1,700.
1,700.
Okay. But what will happen is that the net asset will be translated at what? The rate at the date of what? Acquisition. So let's translate that. Let's translate that at the date of acquisition, the rate at the date of acquisition, which is
0.5.
0.5. How much are we getting? $5,600. Is that correct?
Yes. Yes, that's correct.
So the profit will be translated at which rate?
Average.
Average.
Average rate. That's very nice. The average rate is what? 0. What? 65.
65.
Okay. So what answer are we going to get?
2615.
2615. Okay. So what will be our total now? This will be being this plus this. So in actual sense, this should have been our net asset at reporting, because what normally increase net assets is the profit. So the profit that is going to increase it, and this will be the net asset at reporting. But let's now count to the net asset at reporting itself. Let's now count to the net asset at reporting itself. What is the net asset at reporting?
4,500.
It was
500.
4,500. This will be translated at what? Closing rate. The net asset is the statement of financial position items. So this will be translated at a closing rate 0.8. 63.
63.
Okay. That will give us how much? That will give us how much?
7143.
7143. You can see that it's a loss.
Please, it's 4500, not 4800.
Okay. Supposed to be 4,500. Okay. 4,500. So that will give us how much? 7143. Is
Yeah.
that correct?
Yes.
Yes, this.
So what is happening? We can see that we are getting a loss, isn't it? We are getting a loss. Or
Yes, please.
so our
Yeah.
loss will be how much?
1072.
Okay. 1072. Did you get something 1072 today?
Loss on investment.
Loss on
Okay, that
investment.
one is 1073.
Okay. The loss
So
on
there's a
investment.
difference of
Maybe
one.
it was 10 what?
1073.
Okay, so you can see that is approximation that is causing that, isn't it? All
Yes,
right.
please.
So the loss over there
your mobile
will be the
phone
same
or
as that one,
laptop?
1070. Okay. But you see this particular loss,
Your mobile phone is giving a feedback.
one that we want to take to statement of profit or loss is the one starting from 1st October 2015 to 30th September 2016, because we are preparing the statement of financial position just for 1 year. So we want to show the loss to only 1 year. We want to show the loss for only 1 year. So if you want to show the loss for only 1 year, this is how we do it. If you want to show the loss for only 1 year, let's come here. So we need to come and find the net assets. We need to come and find the net assets at the start of October. What will be the net assets at the start of October? Because we are preparing the statement of profit or loss for just a year. So we have to find the year, we have to find the loss that occurred during that particular period, which is 1st October 2015 to 30th September 2016. We want to show only that loss that happened during that year in the statement of profit or loss. That is the only one that we show. We show the loss for the year that we are preparing the statement of profit or loss for. So what will happen is that before we can do that, we need to know our net assets at the beginning of this particular year, which is 1st October 2015. So we have to go and look for our net assets. Okay. Let's go to the statement of profit or loss for the subsidiary. What is the total profit made for the subsidiary? It's 570, isn't it? The total comprehensive income, because they are showing both profit and revaluation in all reserves. They are all in reserves. So the profit that they made for this year is 570, isn't it? All right, let's come to the reserve. It means that the only thing that is going to increase this particular reserve to 1,500 this year is the 570 profit. It means that the retained earnings that we are going to have at the beginning before we add the profit will be 5,500 minus 570. And that will give us 1,500 minus 570. It means that we have retained earnings of 930 on the retained earnings account before we add the profit for the year. So this will now be the profit. This will now be the I'm coming. This will now be the 930, which is the profit for the subsequent period. We add it to their share capital. What is their share capital? 1,100. Or another way of doing this is that let's come to this place. Let's come to this particular. It's not 1,500.
It's 3,500.
I'm using the associate figure. So what will happen is that let's count to the net assets. Let's count to the net assets. So the net asset over here, which is 4,500. Inside this, there is a total profit for the year of 570. So the question now is, what will be the net asset at the reporting at the start of the year before we added the 570? Then we subtract the profit for this year from the net asset at reporting. 4,500 minus 570. That will give us 3090. 3930 rather. 3930. So this is the total. This is the total gain or loss on the investment, but we are doing for only this year. This year, what you have to do is that take your net assets, subtract the profit for this year from it, because the profit for this year was added to have the total net asset. So the total net asset that we have over there, 4,500, the 570, which is the profit for this year, has been added before we get the closing figure for this particular year. So take that. Then you have the net asset that you have at the beginning of the year before you made the profit. And that will give us 3930. Then we translate this at the opening rate. At the opening rate, 3930 translated at the opening rate. The opening rate will be the rate at the beginning of this year, which is the 30th September 2015. The year starts from 1st October 2015. So we translate this using 0.71. What are we getting? 0.71. What are we getting?
5535.
Okay. 5535. 5535. So what will increase our net assets now? It will be the profit for the year. And the profit for the year will be only this year, because we are calculating the gain or loss for this year. So the profit for the year will be for only this year, which is 570. So we have the 570 divided by the average rate, which is what? 0.65. How much are we going to get?
$877.
877. Let's get a total. Okay. So what should be our total net asset at the reporting? It is the 4,500, which we translated to have what? 7143. So let's now go that 7143. 7143. Are we having a gain or loss? Are we having a gain or loss? Are we having a gain or loss?
It's a loss.
No, it's supposed to be
It's a gain.
6412, but we are not having 7143. We are having higher. Again. So you can see that the total gain that we have gotten over here is the gain, is the loss from a subsequent period that has made this 73 to reduce to this particular amount. So this particular year, the translation gain, the translation we are doing is actually a gain, not a loss, but it's the loss from the previous years, which has made us to have a net loss of 1072. So for this particular year, we are having a gain. Then you go to other comprehensive income, I have gain on net asset translation or retranslation. That will give you 731. Okay. The next one is we calculate gain on goodwill retranslation. So the gain on the goodwill will be calculated for just 1 year, from October to 2016. What is our goodwill figure? Our goodwill was what?
635.
Is 400.
Yes.
Okay.
So at the beginning, we are going to have goodwill 400. At the beginning, what is the value at the goodwill at the beginning? 400 translated as the opening rate at the start of this year, which will be 30th September 2015. That will be translated as 0.71. How much are we getting? $563. Am I correct?
563.
Okay.
560.
What will be the goodwill figure at reporting of this year? It will be 400. There is no impairment of goodwill. So since there is no impairment, if there should be impairment, we should translate the impairment at average rate and subtract it from this before we translate the goodwill at a closing rate. So this will give us 400 divided by the closing rate, 0.63. How much are we having?
635.
635. Is it again?
Yes, again.
Again of how much? $72. So gain on goodwill
72.
retranslation. So you can see that this particular year there was no gain. It was a gain from the previous year. That is making us to have overall gain on the translation of 1072. Yes, well, for this year there was no gain. So we have to show the gain or loss on this year for the year, which is from October to September 2016. We show the gain on the investment for this particular year. So what you do is that you try to determine your net asset at the start of the year. The only way you can determine that is that subtract your year's profit, this year's profit, from your total return earnings or total reserves of the subsidiary. That will give you the net asset at the start of the year. The goodwill, what you do is that you translate the goodwill at the start of the year. Then you also compare the closing goodwill for the year. If there is a gain, you send it to other comprehensive income. So let's look at the total.
Minus 72.
It's 72. Okay.
Yeah.
So 72. So let's now have our total comprehensive income for the year. So we are having two. Okay. So this particular figure will be shared among the parents and then the NCI. So let's show how we share it. So we look at profit attributable to the following people. Profit attributable to the following people. So what we are going to have is that we have the parent shareholding. How much will the parent shareholders be having? You have to know that the profit over here consists of what? Both the parent and then the what? The NCI. Both the parent and then the NCI. So how much, if we know how much the NCI will be taking, then we can know the parent's share. So always we start with the NCI. We start with the NCI share of the profits. The NCI will only have share of the subsidiaries what? Profits. So what is the profit for the subsidiary? Profit for the year. What is the profit for the year for the subsidiary? It is 450, isn't it? Okay. The NCA will have how many percent of that? 0.2, isn't it? Multiply by 450. This is in the subsidiary currency. So we translate it using the average rate because everything in the statement of profit or loss has been translated using average rate. So that will give us 0.65. So how much are you getting? 450 divided by 0.65 times 0.2.
58.5.
Are you sure?
Okay, let me do it again.
450 divided by 0.65 first.
138.
Before you multiply by 0.2. 138. So
Yes.
the NCA is having 138. Out of how many? Is the profit for the year that we are sharing. So NCA is having what? 15. NCA is having 132 out of 15. This one. So the parent shareholding will now be the total minus the NCA share. So 1552 minus 138. Because this profit is for only NCI and the parent. So if NCI is taking 138, then how much would the parent be taking? Let's find that.
1,414.
So that will give us
1,414.
Okay. So what we are sharing is the 15.2. This is the profit for the year that we are sharing. Let's now come to how we share the other comprehensive income. Okay. The other comprehensive income too, we start with the non-controlling interest share. The non-controlling interest share. So total comprehensive income. If you can't do this, just put your figures here, translate, leave it. It's 20 marks. Yes, you can, if you do your net asset table, your return earnings and those things, my sister, you can get 15 marks or 16 cra. Don't worry, leave the rest and go.
This one there, we'll try and balance it.
Or for the foreign subsidiary, that is what I'm thinking it will come. But we solve one question during the intervention. All right. So this one too, we share it among the parents and then the what? The NCI, parent shareholding. The console for corporate reporting is not difficult, like the financial reporting one. That one there, everything can come. It's complicated. Corporate reporting, they can just pick one topic, like this one, like this. They can pick it and set question on it. They can pick consolidated statement of financial position or consolidated statement of cash flow and set question on it. They can pick step acquisition, disposal, complex. They can just pick one of the DC and set question on it. But but financial reporting, everything is coming some. So those people over there, they are suffering. All right. So right now, how much are we sharing? We are sharing 2768, which is the total comprehensive income for the year. But this total comprehensive income for the year, already NCA is taking 138 out of it. So they have taken 138 out of this one. The only thing that they will take share of right now is the revaluation gain of the subsidiary, which will be 0.2 multiplied by 120 divided by the average rate, 0.65. So plus 0.2 multiplied by 0.0120 divided by 0.65. So what we are sharing over here is inclusive of the profits. So the NCA has gotten its part of the profit already. It means that the items that we are going to share over here will be the 413, 731, and these ones. Okay. The NCA will get each share of the translation gain too. Let's find the total translation gain. What will be the total translation gain? $0.2 multiplied by 731 plus 72. The NCA will take 20% of the total gain, which is 803. So we put 803 as a share of their translation gain. So the NCA will take 20% of the revaluation of the subsidiary, and the NCA also take 20% of the total translation gain. How much are we getting in all? I'm getting 334.
336. 337.
337.
That's what I have. Yes.
Okay. So our total amount that we are sharing was 2727. We are sharing 2768. And NCA is taking 337. So what will be the portion that the parent will be taking? It is the remaining one. So we subtract the NCA share from the total. Two seven six eight.
Please, the 803, which value is that?
The 803 is the total translation gain. So 731 plus 72. So NCA also have, because the NCA is also part of the owners of the subsidiary, and this gain is resulting from the subsidiary. So NCA also take 20% of the gain. Are you okay now?
Yes, thank you.
All right. So let's subtract 2768 minus 337. We're having 2431. So if you put the two together, you might be having the same figure that you are sharing.
Okay.
All right. All right, that is all. You can see the question looks very simple, but the workings are plenty.
Complex.
Yeah, I know they see talk.
Okay, this
Early
one,
separate.
you see some of the things, if you can't do it, just go and translate. You see, most of the times it will not come with complicated issues like intra-group trading and those things. It will not come with complicated issues like that. So just go translate your these things at all the balance sheet items will be translated at closing rates. The closing rate at the reporting date. You use it to translate all of them. If you come to profit or loss, we use the average rate. So all the items will be translated using the average rate, but we don't translate the profits. If you translate everything well, you subtract your cost from your revenue, then you get your profits. Try to do the net assets table, do the workings in the subsidiaries figure, calculate the goodwill in the subsidiaries figure. Then you now translate the goodwill at the closing rate at the reporting date. Then you can do the workings for the NCI, the share of the impairment and all those things. You can do it in the subsidiary currency. And at the end, the final figure that you got, you translate it using the closing rate at the reporting date. Then you send that to the NCI in the statement of financial position. Another way of doing it is that you can also do the workings for the group return earnings, where you are going to send the impairment and the profit for the year. You subtract the impairment from the share of the profit of the subsidiary. Then you translate the subsidiaries, the parent share of the subsidiary profit using closing rates. Then you now come and take the parent investment. The investment is measured at opening rate at the date of Translation. Now translate it using the reporting rate before you remove it and see whether you are getting a gain on it or you are getting a loss on it. If you are getting a gain or loss, that will be paid by the parents. That will be paid by the parents, not the subsidiary, not the NCI, because the NCI is not the one paying, it's the parent that is paying. So you can see that if we should have done the thing one by one and share the loss, the parent will having a total loss of 10.72 because they are going to have a loss on the goodwill too and all those ones. So at the end of the day, they will have a loss up to the total of the one that we send to the return earners. That is it. That is the easiest way to go about it. But if you also want to show how the standard recommend it, that find this one on net asset, find a gain on the net asset, then you find a gain on the goodwill like the one we have done it over here too. No problem. At the end of the day, the gain that you get, you share it among the NCI and then the parents. That means we are going to do everything at normal rates. The NCI will be translated at opening rate at the date of acquisition. Then you won't do anything about it again. The share of the profit will be translated using average rate. Then you will now come and do these workings. All the gain that you get for the entire year will be shared in the proportion of the NCI and the parents' percentage holding. That's how we do it. But if you don't want to do this gain and those things, which will also carry mark, because this is how the ICA marking scheme is going to look like. This is how they are going to do the working. But if you also use the closing and those ones, nobody is going to beat you, because that is also another way of going about it. All right.
Okay, let me ask a question, please.
Is that
if it's the other income that we are sharing among parents and subsidiary, what about the first profit we got?
the first what?
Profit.
The 1,700.
The 1,552.
The 1,700 we have gotten.
No one.
Two
You
one.
know, the statement of P or L account. We had
Statement of
one profit or loss.
let me show that this. Okay. Okay. So which one are you talking about?
I'm talking about the first profit for the year, 1,552.
1,552. Okay.
Okay, that one too, we share it between parent and subsidiary.
Yes, because this is including the parent figure and also the subsidiary figure, because we consolidate the parent and then the subsidiary. So part of it is for the subsidiary, part of it is for the parent. But the subsidiary parent is having 80%, NCA is having 20%. So if we know out of this profit how much the NCA is receiving, then we can know how much the parent will be receiving or how much will be for the parents. So NCA is receiving 138. Then it means that out of this profit, NCA is 138. The remaining is for the parents. So we share that one too. Then we come to the other comprehensive income too. That comprehensive income, we have the 15,000, the 1,552 up in it, because we added the two, we added this and this and this to this one and have the 1,552. So it means that this one, the NCA is already having 138 of the share. So the NCA, what they are going to have the share over now is the other comprehensive income items, which is the gain on the revaluation for the subsidiary, which is 120. We translate it using average rates. The NCA will have 20%. Then the NCA will also have 20% of the gain, which is 731 plus this. You share this, you add the two, then you add it to what the NCA is already having from this. And that will give you the NCA total. Then it means that out of 2768, NCA is having 337. So if NCA is having 337, it means that the remaining portion is for the parent. That is how we separate it and do that. So we share the two. Profit for the year will be shared, and the total comprehensive income will also be shared. Are you okay now?
If your oracles are right, can we try one question under the foreign subsidiary?
You do what?
I'm saying that if your oracles are right, can we try one question again under this.
The questions are there, so maybe we do another one during intervention, because tomorrow I
So
have to do-
Linus,
No
Yes.
intervention, there will be pressure. Let's get one day and do it again. If the
Yeah, so-
oracles are right.
yeah, Linus.
yeah.
So why is it that when we get here, the profit for the year, we don't use the direct sharing of the 20% and the 80%, but we rather go and find the profit for the year for the subsidiary only and take care of it for the NCI, and then we come and subtract it from the total profit here before we get the parent share.
Okay. Let come again. You say, why is it that I've gotten the last part of the question? Why is it that?
Why is it that this 1552, we couldn't share it between them as of their percentage holdings?
No.
Like the
The
80-20.
15-2, get this one. We consolidate two accounts. It's two accounts that we added together
Okay.
before we get this profit. The profit is for the parent,
Okay.
the parent's own activities, because the parent is also trading.
Okay.
Look at the
Okay.
parent profit. So the parent profit over here, which is 900, the parent profit over here, which is 700, the 700 over here is also part of this
Okay.
profit, which NCA does not have any share of that.
Has no issue. Okay.
So the profit that we are having over here, the parent's own profit, which is resulting from its own ordinary activities, is part. The parent share of
Okay.
the associate profit is also part.
Okay.
So let's look at the parent profit for the year. The parent profit for the year was what? 700, isn't it?
Yeah.
Okay. The share of the associate profit was 400. In total, the
400.
parent
Yeah.
is having 1,100 as their own portion
1,100. Okay.
of the profit. Let's now find the parent share of the associate profit and see something.
Okay.
0.8
Wow.
times 450.
Okay.
How much are we having?
No, of the associate or subsidiary.
On the subsidiary, 450.
Okay.
360.
Yeah, 360.
0.8 times 450.
Yes,
Then
that's
plus-
360.
Okay, that'll give you 360, isn't it?
Yes.
Plus 1,100.
Okay.
That'll give you 14 what?
60.
60.
420.
That is the total parent share. That's the total parent profit for the year. But you can see that we have 14. It's because of the approximation that we are not able to get a 1460. Are you getting it? So the
Yes.
profit over here is not for only the subsidiary, it's for the parent own profit is part, and the subsidiaries also profit is part. So
Oh,
if
okay.
you know how much the NCA is getting, then remaining portion will be for the parent.
Okay.
Are you okay now?
Yes. Thank you. Thank you very much.
All right. So Auntie Joyce, don't worry. Auntie Joyce,
Yes.
all right, don't worry. Let's see what happens, because I still have some two topics to treat with you, which is console, step acquisition, and disposal. Maybe last sitting was complex groups. I don't know whether it will come. So let's see, we did a week and see if I can do something.
Okay.
Are you okay? Right now,
Thank you.
it is too
Yes.
late, and I'm not home, so I have to go home.
Okay.
All right. So I'll see you people tomorrow. I wish you all
Thank
good.
you.
All right.
Thank you. The same to you.
All right. You're